Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive spinning top yesterday as the market continues to sit upon both the November 2002 high at 101.70 and a seemingly still effective but broken lower time, currently 101.32, of the January to May 2021 bearish Andrews pitchfork. Looking below, we have the interesting 61.8% absolute Fibonacci line at 99.15 and the primary target X for the imperfect descending triangle at 99.05, whilst the secondary harder to reach target X1 is down at 96.10. Meanwhile above, we have a fairly clear area until the congestion between 103.38 and 103.69, with the notable levels being the January 2017 low at 103.38 and the December 2016 low at 103.49. So far today, an attempt a little higher, but then was being capped by last week's high at 102.78 and we've pulled back down since. Cable, aka sterling against the US dollar. A third bullish white soldier yesterday. There was a continuation, albeit a slow one, from last Thursday's combined immediate countering a bullish engulfing pattern and hammer pattern. However, the most notable feature was that yesterday was the first close above and outside the upper time, currently at 119.99 of the late April to late May bearish shift pitchfork. This is a significant move higher, as this bearish pitchfork has shown the way lower for nearly 2 months. It also puts at risk the harder to reach target X2 at 115.30 from the recent diamond pattern. Above, well, we have immediate resistance from the May 2020 low at 120.73, but beyond that we have resistance at 121.54 and then again at June 2020 low at 122.48. Now this last one is interesting as the slowly declining short medium moving average, currently 122.43, is entwined within that, and we haven't had a close over the short medium moving average since February. So far today, a second attempt at the May 2020 low, but so far unsuccessfully. Euro sterling. A second bearish black crow yesterday, but the decline was halted by the April 2021 low at 84.70, plus the oft-mentioned and tested 3 support levels from the last few weeks. They are the rising medium moving average, currently at 84.67, the flatlining long moving average, currently 84.43, and the September 2021 to date broken downtrend, currently 84.21. These last 3 are continuing to separate out and thus losing their combined potency. Overhead, we have the surprising resistance of the sharply declining short moving average, currently 85.03, but only on a closing basis. And also the breach, but more serious looking short medium moving average, currently 85.30. Looking at the bigger picture, we have, of course, still the very large falling wedge pattern, currently at 84.21 to 18.93 from many months ago. And this has a potential target X4, ambitiously up in the 88.65 area off the top of my daily chart, and a really big ask. Closer in, we have target X1 in the 87.65 area. This is the harder to reach secondary target for the recent smaller lopsided diamond pattern, plus target X3 in the 8800 area, the harder to reach secondary target for the recent extended diamond pattern. On top of all of this, we have targets for the December 2021 to May 2022 reverse head and shoulders pattern. A primary target X5 for this reverse head and shoulders pattern will be in the 87.75 area, and a harder to reach secondary target X6 will be in the 88.65 area. Now targets X4 and X6 are currently just off the top of the daily chart. Now all these targets I've noted have been on the upside and at various times have been under threat. This last and latest pattern is a late March to mid-April based large ascending wedge pattern, currently 88.13 to 86.44. And unlike the others, it is a contrary one, a bearish pattern. This still has a seemingly much harder to reach target X7 down in the 81.15 area, right off the bottom of the daily chart. Now, one final point I'd like you to think about, and that is whether the action since late June today is possibly forming a bear flag pattern. More on that should it develop. And so far today, well, a higher open for small move lower, down just below yesterday's low, but not much further. We still have the April 2021 low nearby as support at 84.70, and the medium moving just underneath that. US dollar against the Indian rupee. A third bearish black crow yesterday and a continuation on down from last week's immediate countering key reversal down and bearish engulfing pattern. This time the market opened and closed below the 100% projected Fibonacci line at 79.81. It is also a continuation of the overall pullback from the all-time high made 2 weeks ago. Meanwhile, we still have the harder to reach secondary target X1 up in the 80.43 area. This is for the recent bullish measured move higher. Overall, the market is still in between the overhead middle time, currently at 80.64, and the lower time below, currently at 79.18, of the January to early April bullish Andrews pitchfork. Now, this bullish pitchfork has been running the bullish angle of attack so very successfully since the end of the first quarter here. So far today, a reactionary move back up, but seemingly capped by the old 100% projected Fibonacci line right now. US dollar against the Brazilian real. A strong, reactionary, bullish open and close long black Mariposa yesterday. This took the market back down below the middle time, currently at 548.36 of the April to late June bullish Andrews pitchfork. Looking at a larger picture, we still have a potential primary target topside target X in the 568.85 area and a harder to reach target X1 off the top of my daily chart in the 584 area. Both are from the March to June ugly double bottom. That's the actual name of it, ugly double bottom. Though yesterday's action, I'm sure, puts a dent in that idea, though the bullish Andrews pitchfork is still alive and well. Below we have the two 50% Fibonacci lines at 527.37 for the May 2020 to April 2022 move, and at 522.76 for the March 2021 to April 22 move. In between those two 50% Fibonacci lines, we have the flatlining long moving average currently at 523.75. Overall, just keep an eye on how the market continues or not, utilizing the bullish Andrews pitchfork as its principal bullish angle of attack. US dollar against the Mexican peso. A second bearish black crow and a concerted, if unsuccessful, attempt so far at trying to push down through the flatlining long moving average, currently 20.42 even. The market is currently in between the middle time above, currently 20.75.23, and the lower time below, currently 20.24.09. And that's of the late March to late June bullish shift pitchfork. We also have overhead the combination of the neckline of the September 2021 to February 2022 head and shoulders top, currently at 20.61.57, and the interesting 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.60.62. Beyond that, we have the neckline currently at 20.75.23 of the mid-March to early July reverse head and shoulders pattern, as well as the 50% Fibonacci line of the November 21 to March 22 move at 20.78.02. Meanwhile, below, we are fairly clear until the lower time, and below that, we have the medium moving average currently 20.16.93 and the short medium moving average currently 20.13.86. So far today, a further attempt lower, breaching once again the long moving average, but not making any real headway lower after that. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Tofpik and ADM Investor Services International Limited. And here comes the final bit.